Here's the Elliott wave forecast for October 13th, 2011. On the NASDAQ 10-day chart. This area right here could end up being a wave 2. It may be shallow. It may not look like a zigzag wave 2 or any type of wave 2 formation, but it's acting like a wave 2. And this is the reaction is a third wave type of move off of the low of 2470 in the NASDAQ. The highest target I have, if this is wave 1, wave 2, and wave 3, would be as high as 2800. But if it's 0.618 times wave 1 plus wave 3, or equal length to wave 1 plus wave 3, the highest target I have would be around 2700. But there's two major earnings reports coming out tomorrow. There's JP Morgan in the morning, and then there's Google in the afternoon, or the Google after the close. And those are the first two major earnings reports, and the reaction to those two earnings are pretty important because it could be the start of a corrective wave or the continuation of a third wave. Depending on the reaction, I mean, the futures have been very unreliable going up to 8 p.m. Eastern time, and usually the futures start defining what they're going to be doing by 3 a.m. and I can't stay up until 3 a.m. every night. So just take this forecast with the futures at current levels up 2 in the S&P and up about 3 in the NASDAQ. That's the current futures reading. So based on those readings, this is my forecast. So I've made forecasts in the past 10 days that have been awkwardly wrong. Like there's a couple that were pretty off because the futures reversed dramatically in either direction. So futures are unreliable right now, but I'm guessing that there'll be a stronger reaction by 3 a.m. and by 8 a.m. or 7 a.m. when JP Morgan reports. But if this is playing out the way a third wave would be, if it's 1.618 times wave 1 in NASDAQ, we target as high as 2800, and wave 1 plus wave 3 equals wave 5 would be 2700. For S&P, I know some people are like, your forecast is so wrong today. Yeah, but it's been right a lot. But also, you can't blame me when the futures reverse in a dramatic fashion in either direction. I can't. I mean, I'm posting these forecasts at around 8 p.m. Eastern time, and I'd like to post them in the morning, but I send email newsletters out every day, like 2 or 3 times a day, and I don't want to overwhelm people with 3 newsletters like 4 hours apart. So I'm gonna post these forecasts around 8 p.m. Eastern time every day, like I normally do. But again, futures reversed in a big way to the upside. That's great, but if they go to the downside, I mean, I just don't want to be completely wrong if it reverses to the downside. But again, if this plays out, upward 3, S&P upward 3 would be wave 1, wave 2, wave 3. Would target as high as 1270, or at least 1260 in the S&P. Let me see, wave 1. Let me calculate that again. Sorry, 160. No, more like 1310. But if wave 5 equals wave 1 plus wave 3, it would target as high as 1240 to 1250. But again, I don't know how the futures are going to end up, so don't get mad if they gap down a lot, because I'm just basing this on the current futures. Some people are like posting. I have to admit there are some forecasts that were just awkwardly wrong, and I can't be faulted for that when the futures reverse in either direction in a big way. So again, I'm just going to talk about this in the video right now, just because I get some emails like, you were so wrong, you know. But my forecast I don't depend on. I depend mostly on the intraday analysis, because that's when the market is actually open, and futures are very erratic. Have been very erratic recently. So again, I'm basing these forecasts on the current 8 p.m. Eastern time futures readings. Anyway. I have to admit there were some pretty awkward video forecasts, but if the futures just maintain like a normal level and don't fluctuate rapidly, then these forecasts could be dead on. But like for example, last Friday wasn't wrong. It was, I expected a third wave, but not the size that we saw last Monday. But the futures were didn't reverse, but they were dramatically higher than I thought, and my forecast was looking for a fifth wave, and you get a third wave. Anyway, enough of my babbling. But I saw a video the other day, and I was like, man, that's wrong. I'm not perfect, man. People think that I'm perfect, and like they expect perfection out of me. And I'm not saying I've been wrong about this rally. I've been right, but the magnitude of the rally, not so much. I mean, I didn't expect it to. I mean, last Friday I thought we were going to drop in a wave too, because I bought around 10,800 of the Dow and sold around 11,050, and made about 3 points in TQQQ. But I could have made a lot more if I held on. But because unemployment report is very can change the direction of the market very quickly, and it could have, but it didn't. Anyway, yeah, that's my rant. I have to rant about that because, I mean, I saw this bottom type formation forming, but the magnitude of the rally is something I didn't predict. So, but now that we've seen the magnitude of the rally, I can forecast potential third waves and fifth waves. Anyway, if this is a wave 4 and this is a wave 5 that's extending to wave 5 that's equal length to wave 1 plus wave 3, your target is high as I believe, let's see, about 12,000. And if this is 1.618 times wave 1, the highest target I have would be about, let's see, 12,500. So this still could be a bit more of this third wave to go, because if this area right here on S&P down Nasdaq, if that area last Friday, if that area right here is a wave 2, then the third wave has a much longer way to go. But I would like to say that this third wave is going to be precisely at those levels, but earnings are coming out tomorrow, and the futures could change dramatically. So if they drop dramatically, don't get pissed off, because I'm just basing my forecast on the current futures. So I may stay up until 3 a.m. to watch them, just to make sure they don't fluctuate too dramatically. But the European market is raging. It's like third wave all the way, and there's a lot of bottom readings. And even Kramer came out with he talked about investors' intelligence, and he's been a permanent bear for a long time. Not a long time, but in the recent drop. But investors' intelligence readings was 46.3%, which is 1% away from the March 2009 low, which means that as a contrarian, you have to look at that low. I mean that amount of bears as a contrarian indicator, because there's too many bears, and when there's too many bears, they have to cover, and that's why I think if the initial fuel of this rally was short covering, but now it's turned into a go long market for now. But again, those third wave targets are very likely if the earnings reports tomorrow from Google and JP Morgan are good. Sorry for the long video, but I had to rant. That's a wrap.